Good morning, everybody. Welcome to the Flow Show. New week, Monday, 23rd of September. Ready to go again. And we got some data out this morning that's not making things look too good for Europe, but we'll go over that in a moment. Morning, Kay. How you doing, mate?
Morning, Ryan. Morning, everybody. Yep, I'm doing. Starting the week, so we are still have energy left. Let's put it that way. Yeah, we're ready to rock and roll again, man.
Good stuff. Good stuff. Right, let's get into it because there's quite a bit to get through. PBOC fixed its reference rate lower again today, 7.0531 from 7.0644. They also cut their 14-day reverse repo rate by 10 pips to 1.85%. This is coming ahead of a holiday, 7-day holiday that's kicking off 1st of October. So they're just easing conditions slightly for that. Now, what might be a bit of news is that there's a meeting of three of the regulatory bodies, the PBOC, the CSRC and the NFRA, which are both, as I say, regulatory bodies. That's happening tomorrow morning. So there may be some talk of further easing or something, because it's regulatory, that they're going to be doing something else. So I've been getting a growing feeling that we might be heading to some bigger moves regarding easing. That may be laying the groundwork, but we shall see. But certainly in China, things not picking up just yet. We'll start looking at some data. It's PMI day today. For a few countries, some of the flash numbers coming out. Aussie kicked off with a bit more softness in manufacturing and services. We're also seeing that in Europe as well. And I'll talk about gold because that's just nudging off the highs. I think it's had a little bit of a nudge today that the global manufacturing picture is one of softening rather than strengthening. You even see India there, seeing their manufacturing coming down, but still healthy numbers there. Anyway, over in Europe, hot on the heels last week of France upping their growth forecast for 2024. We get a stinky set of numbers there. This services number particularly, we had that boost, that Olympic boost last month. It was only expected to fall 2 points for some of that washing out, but it actually fell out of bed straight from expansion into contraction. So not good news there. Manufacturing, though, did tick up a point, but remains heavily in contraction. Germany as well, real stinky one over there. Manufacturing falling further into contraction, and services as well going backwards. Was only expected to drop a pip, went down 6 instead. The pan-Eurozone numbers, these are all flash numbers, obviously, reflecting those early readings as well. Over in the UK, a bit of softness there too, quite a steep pullback in services, manufacturing as well. So losing just around a point, a big figure on each of those, but still holding above the contraction expansion line. So market mainly looking at the euro side of things there, particularly Germany and those stinky readings, because we've seen the euro dip, although it is coming back a bit now. There's also problems in Germany because the stats office has apparently suspended some of its big data points after they messed up some sort of data update. So it could be we're not going to get some German hard data for a while, or governmental data for a while. We shall see. ECB's Lagarde was out last week saying that uncertainty is still profound and inflation is projected to return to 2% over the second half of next year. She also said, considering the size of the inflation shock, this unwinding is remarkable. Well, it's not quite a surprise for many of us, but it seems to be a surprise for her. One of the ECB hawks is testing out his new Dove suit, Kestrel Kazakhs, as we used to call him. Said services inflation is a concern, but the direction of rates is downwards, and says rates too high for too long could damage the economy. Spain has joined France in raising its GDP forecast this year to 2.7% from 2.4%. So a bit of more positivity coming in there. It's, as I've been saying for the last few weeks, it becomes a bit of a moot exercise tinkering with GDP forecasts is close to the end of the year because you've had most of the year to know what it's going to be anyway. So anyway, they've hiked that forecast for this year and dropped that data right on the time when Germany falls out of bed as well in those PMIs. What do you make of it this morning, Kay? We got some real problems, particularly for Germany. Further problems, should I say?
No, it's extremely positive, Ryan. Those German numbers are still above zero, so I think that's the positive to take from it now. I'm joking, of course. Those are absolutely very bad numbers, and the German issues continue. I think the kicker today was really there was supposed to be a bit of a give back on those services, but dropping severely back below 50 is not a good sign on those French services PMIs. We know about manufacturing sector that's been going on for months, if not years now. That the manufacturing sector globally is not doing great. But yeah, I think it's a big give back on the French services, because we could have argued a little bit of a hold perhaps on let's say Paralympics, but then I've already said, I mean, they should not have the same impact as the Olympic Games, but no, it's not a good read. Now we will have to wait and see what the US is coming up with, right? If it's a global phenomenon, then perhaps it could save the euro for a while, or send the dollar a bit lower again post last week's moves. So we are still banging our head against interesting levels in other things as well, outside of the euro. So I think now the world is already turning its attention to what the US numbers will bring. But for the eurozone, it just confirms my view that I still don't like the euro.
Yeah, and but it's looking like it's trying to creep back as well, because again, it's a case of whatever euro you look at. Euro versus a dollar is a different kettle of fish to what's going on in some of the crosses as well. So it's all up in the air as usual. But anyway, and just for on the France thing, there is more political mess going on there. Just some wrangling going over there. Barnier's trying to pick his government, and other people are up in arms. It could create some problems in the months ahead politically there. Not that things were looking that good anyway, but those I've seen some of those stories bubbling around today as well. Right, just looking back at some of the data from last week, US and Canada. We've got some little bits and bobs, mainly Canada retail sales and some PPI data. Retail sales pretty good, but we're going all the way back into July. 0.9% there versus 0.5 expected, turning around a negative number from last month. Core retail sales as well coming in 0.2%. PPI is going the BOC's way. This will keep them on the cutting path at least. We've seen some pretty strong negative numbers for this month's PPI, particularly raw material prices there coming in down 3.1% of the month, and expect to come in -2%, and year-on-year numbers turning negative as well. So we keep an eye on that, because it could be that disinflationary pressures are picking up a bit quicker, and that might catch the Bank of Canada on the hop, although they have already done 3 cuts, but that may keep them going on that one as well. Over at the Fed, we've had Waller coming out saying that 50 pip rate cut was the right number. We're at a point where the economy is strong and we want to keep it that way. He said, though, that the inflation data during the blackout pushed him to a 50 basis point cut. So otherwise he would have gone for 25. It says inflation is softening much faster than he thought it was going to, and he could imagine going 25 pips at the next meeting or two. He said the Fed is completely data dependent at this point and would continue to support big cuts if needed. Now, the dissenter at the Fed last week, Bowman, was out with some comments as to why she dissented. She said she sees the risks of the FOMC's larger policy action could be interpreted as a premature declaration of victory on inflation. She added, we have not yet achieved our inflation goal. And though she agreed it was appropriate at this meeting to recalibrate the Fed's funds rate level, she preferred a smaller first move. Fed's Harker, bit of a victory lap, says the Fed has done a good job navigating the economy, sees risk of inflation stalling and a softening in the labour market. So he's all tickly boo on that one. Rate cut expectations and forecasts. HSBC for the UK see UK rates to drop to 2.75% next year. They see a cut coming in November and then every meeting next year from February. In terms of actual pricing, particularly for November, there's less than 25 basis points priced in for the November meeting. So the market getting a bit undovish over the next or the meeting in November. Over at the Fed, Reuters poll sees the balance of economists seeing a 25 pip cut in both November and December. That's 86 of 107 economists. They also, or the median in that poll, showed the Fed is going to cut the rate to 3.25 to 350 by the end of 2025. And a little headline that's not much in market terms, but it just highlights what's going on in China. American Airlines is going to delay resuming some flights to China. They say there is still a lagging consumer demand. So no one's looking like they want to fly to China anytime soon. So that all just filters into what's going on over there as well. We've got another bill going forward this week to avert a shutdown. This one is apparently going to kick the can through to the 20th of December. So we'll get to see how that carries on. That will leave it 5 days before Christmas. They have to vote on another bill, but that doesn't sound too good. I'm thinking that they may look to kick something a bit longer through to January when the new bod, whoever it is, takes over the hot seat. And over at the RBA, there's some political wrangling going on there as well. They're facing some changes to how the RBA works, frameworks and that sort of thing. This is part of the review that they've been running. The Treasury head, Chalmers, he wants to basically split the central bank board into two separate entities, one for setting monetary policy and one for overseeing governance. However, to do that, he needs the backing, the votes from all the parties. And what the small Green Party has done, they've thrown a big spanner in the works, saying that they will only vote for his change if they get a rate cut from the RBA. So the whole independence question is coming up in Australia politics. It looks like if they do hold out for a rate cut, which they won't get, then this reform plan is out the window and it's back to the drawing board. At first glance, I saw that headline. I thought, well, you can't have political parties putting rate cuts as the bargaining chip, but it hasn't really affected the Aussie at the moment. But if this does keep ticking up, and then we could start seeing something happen in the Aussie dollar. Obviously, we've got the RBA this week as well. I'm not sure whether they're going to comment on that, but that's just part of what's coming up this week anyway. Kay, anything from that lot you want to pick out?
Not really. It's a bit of a sorry about it. It's a bit of a strange one regarding that RBA thing. But of course, yeah, political parties will always try to push for stuff, regardless what the rules and of independence are. Of course, anything to pick out? No, but I've seen also Reeves starting to change tack a little bit on the potential wealth tax. They probably had a lot of pushback from businesses and from influential people, let's say. So it looks as if this build up to the end of October's budget will be one of let's come out with a catastrophe scenario first, and then and then gradually water it down. That seems to be how it's going to work. Of course, I mean, if really they won't put any wealth tax, that would entice in bigger fortunes to stay here. I don't think actually UK will want to lose its advantage versus what the majority of the eurozone is doing in tax wise. And actually, what's his name? The guy who has been named in France. He's thinking about a wealth tax um, um, over there. So that shouldn't help in that respect either. No, for the rest, yeah, China probably willing to really push the buttons, and you know, I think they also saw the Chinese yuan regaining some strength, and potentially using this to press those buttons. It's easier to do it when your currency is strong than when your currency is weak, of course. So it's going to be a few interesting weeks coming up for the Chinese yuan, I'd say. Um, that is sort of it. Yeah, the rest is more forward looking. We'll talk about those Japanese elections a bit later. Just note that the opposition has voted no dying to counter the LDP. There was a choice between Edano and Noda. Edano being the one that was handling a lot of the affairs and post or around the big quake in Japan. And Noda has been prime minister, and I think he's even been finance minister, if I'm not mistaken. So two well-known names coming to the fore there. Not sure if, despite all those little problems in regards to bribes and stuff, are going to kill the LDP's majority. There's some real heavyweights waiting there to be elected, but I guess we'll talk about that a little closer to the end of the week.
Yeah, definitely, mate. Thank you. Angela, just a couple of those tweets you put up. Your first one on the S&P. I hate things like that when people just find patterns and make comparisons and whatnot. 2008 was we were in a completely different world. We were just kicking off the Lehman stuff, or had been kicking off the Lehman stuff and everything that going on with that. So completely different set of circumstances, and I'm not drawing any conclusions from that chart to this chart. And also your gold tweet. Gold isn't, I don't believe gold is something that's held a lot in Israel anyway. So again, I don't think that's any big news that we need to worry about, but I'll wait to see what comes from that. Right, so let's have a look. As I said, what's coming up this week? We've got a couple of meetings. We've got the S&P, got the RBA. So we've had all the PMIs today, got the US ones coming later on today. We'll keep an eye on that. RBA tomorrow, largely expected to remain unchanged. Again, we're in the situation where I think we're just waiting for the RBA to put a less hawkish spin on things. I wouldn't say they're going to go dovish, but at some point we'll probably see the removal of the line prepared to hike again, or considered hikes, but deemed staying unchanged was the best way forward, whether that's today or not. is another question. But that, I think, is the risk going forward for these RBA meetings if they suddenly drop that hike line. We get some house price data out tomorrow as well from the US. Housing seems to be doing all right again. So we'll see if those prices come out all well and good. US consumer confidence, that's the conference board number. So that's going to be a pretty decent one to watch. Obviously, what the consumer's doing, particularly straight after the Fed last week. Data since then has been more soft landing-ish and more 25 pip cut than 50 pip cut. So we'll see if that data follows suit as well. Not too much out on Wednesday, home sales. That's about it, unless you fancy some Singapore CPI. Thursday, SMB day. So that's probably going to be the big one, the quarterly meeting. We'll see if they are going to cut rates and by how much, whether it's a 25 or a 50. Later on Thursday, we get durable goods orders. Again, another reasonably sized data point just to keep an eye on there. GDP, that's probably the final number by now for Q2. We're just about to finish Q3, so everyone's going to ignore that. And then later on, we have some pending home sales numbers as well. Friday, get some CPI data from around the Eurozone and GDP from Canada. PCE, that's going to be the big one for Friday from the US in amongst that income and outlays number there. A bit of inventory data, final Michigan numbers later on in the afternoon. So a so-so data week this week. Then next week we obviously kick right off again. We'll get the ISMs and whatnot. And we're heading into month end as well. So value date Thursday, Kay? 30th? Yeah.
So yeah, I think so. Yeah, with the 23rd. So Thursday, the value date. As where we are now, if I have a quick look on the stock performances, I think the S&P is up a bit. Is up actually. Yeah, compared to the close, yeah, we're up a reasonable bit. So yeah, it should be there should be a few things to do, especially that we are again at the end of a quarter. So usually the quarter ends are always accompanied with some bigger flows, some potentially bigger rebounds needs. Let's see how the start of the week develops here for the stock markets, and then get a bit closer to the midweek. We will know a bit more about what the models will say. I mean, if all things equal, as we stand now, it should be there should be a few dollar sales coming, but we will see just the correlation of stocks versus what the performances have done across the board.
Yeah, thanks, mate. Right, let's have a look at some of the price stuff going on today. As you've seen, the euro and cable getting a bit of a kick in the nuts on that PMI data. Euro couldn't quite get back down to this 70s level, came close enough. It went quite easily through this zone here, so I might have to adjust that on my charts. It's maybe becoming a bit wishy-washy, but we'll see how 111 does if we get a retest of that. It doesn't really change anything on the wider picture. We're in this bit of a consolidation phase now, 110, 112. So this is just a sort of a midpoint pivot now around 111. Really, we're just trading between these big figures for want of anything better. Obviously, if the US data this afternoon is a bit soft or a bit strong, we're going to get a move either side of that. But in the meantime, since the FOMC at least, we're not doing too much. Cables bounced back a bit stronger. Still looking pretty strong. Still got a bit of that exceptionalism in it, as you can see there. But again, maybe we need to just find out where we're going to find support above this area down here in the 131s. But it's still looking like it wants to try and make new highs, or at least keep the momentum going. If we're in a sort of second leg here, second phase here, we've got several phases, as you can see. If we go back a little bit further, keep having these phases. So onwards and upwards. Looks like Elliott Wave's wet dream, this one, Kay.
Yeah, the stepping stone. And again, now since you raised it, if I look at how the FTSE behaved, it's again a lagger. So if you take those different performances into account, I'm going to say this now again. I wouldn't be surprised if the cable ends the month on its high, because the correlation is sort of that if S&P outperforms the FTSE, there may be some catch up to do there, and sterling buying also at the and dollar selling at the end of the month. So front running the events, it could be that we print a high on that cable, and that we finally see the 134s after all.
Yep, quite possible. Tarek was asking about the euro. Are we going to begin a downtrend? At the moment, it doesn't look like it. If we're going to start to begin a downtrend, then we've got to start knocking out more of these fib levels. We had a go. We got down to the 50 fib of this leg, and got down to nearly the 38.2 fib of this phase. So you can see we're not looking like a downtrend at the moment. Depending on your time frame, though, Tarek, what you're looking at, certainly from this picture, it doesn't look like we're close to starting a downtrend, but the levels will be the decider. If we get under 110, maybe something is changing. Otherwise, I think we're not out the woods yet on this 112 number. So I wouldn't be surprised if we get another test out and it holds, then maybe we're looking at a steeper pullback. But, you know, I'm not expecting this to go all the way down to 106 or something like that, unless something materially changes in the data, either on the US side or the Eurozone side. So if you want to, if you're thinking that a trend's going to break, let the price tell you what it's doing. And that's why I use fibs a lot, because that's my indicator whether we're breaking a trend or not. Ali, you're looking at dollar CAD. Yep, it's always easy to say you wanted to sell it up here. When it was down, I didn't go again. I had this level pegged over the Fed, but it was just too close to me. So if we'd have got to move a bit higher up, I might have had a go, but I didn't touch it myself. So it's not doing very much at all, this dollar CAD, particularly as we've come through BOCs, FOMCs now, and particularly over the Fed, it was really fairly quiet. So I really don't know which way this one's going at the moment. It is looking like it's holding this uptrend off this low still, but unless it actually manages to get through here and hold above 136, it does keep the downside in play. But I'm not overly keen on shorts, and I think if we do get another test up here, we're probably going to end up breaking it and maybe then get through that 136 and head higher. But you never know. It's still bull flaggers will still be watching. Bear flaggers will still be watching this one for potential breakdown. But I'm just not so sure. I'm not as bearish on the dollar as I have been. Now we're past the Fed. Euro sterling, another one that's continuing to slide now. I was myself waiting for a possible proper retest up here of 84s. Never got it. It's continued going. So for me, I'm sitting on my hands. Kay, you still short this one, I'm sure?
Yep. Don't change a winning team. And I've on Friday we had a little look above 84 and failed. I therefore today dramatically brought down my stop to just above that Friday high, just above 84. The figure I think I'm at 06 or 07 or so, and that is just a technical stop loss now. And just in case Reeves, Starmer, or whoever in the UK is starting to mess things up. I don't want to be long sterling anymore, but that will be a decider on the sterling side, because I think the euro side is still pretty clear. Still looking downwards. Data confirm on the euro, so therefore I still am in this position as well. As I said, it's probably going to be decided in the next month or so. What's happening rather on the sterling side than the euro side. That's what I would think now.
Yeah, I could agree with that. We're probably getting close to the point where we'll start to get a lot of what's happening in the budget coming out. We already know the broad strokes of it. It's looking like on the tax front, they might leave things like corporate taxes alone, income taxes alone, but capital gains changes might happen. So slowly but surely, we'll get, as I say, we'll get a lot of the data or a lot of the thoughts of the Chancellor before we actually get to budget day. So we should know well in advance what's going to happen. And that's the market will probably do most of its move before we actually get to the budget. So yeah, in the meantime, this one is continuing its trend lower. I was looking at some big or the wider picture earlier. I've got this fib on it. I'm not overly keen on this fib because it does cross some big events, you know, like the pandemic high and that sort of thing. And it's all, you know, it's had some big moves in here to gauge this fib. So I'll put it up there, but I'm not keen on it. 82 is a big old level, big old historical level. That's the next big one to keep an eye on. And that fib does come in around it. Otherwise, got this prior low here, 83.40s. That's the close one. And then we've got a couple of levels in here, 83, 82, 76s, which again have just shown up a few times in the past. So I'm keeping an eye on that. But otherwise, this 82s is a big one down here.
I think it's massive, Ryan.
Sorry, mate?
It's massive, that 82.
Yeah.
It is really, you know, it's very simply halfway between the pre-Brexit and the post-Brexit high. We've come down there, bounced hard, and now we are like gradually sliding back down to there. I think it is massive, 82, massive, big level. Yeah.
Yep. Hence why it's highlighted, because as you can see, it goes back. We've had action along there a lot of time. You can't really see it on the weekly, but if you zoom in a bit, you'll see how all these weekly candles perform around it. So anyway, long way to go yet before we get there, and we'll see what we do. But there is a few levels in the way first. I'm not interested in chasing this one, as I said. I'll more look to see if we get an outsized move. Maybe think about seeing if we go the other way at some point. Ali, you've got your heart on dollar longs. I'm very rarely trade my gut. Only on certain circumstances will I trade my gut feeling, because I'd rather let the price do the talking. What I would say though is two things to note. Firstly, for the dollar generally, okay, we've got a bit of a bounce in the dollar in some pairs, particularly dollar yen. And that's happened even after the Fed have confirmed their stance. So yeah, I think we've got the potential for a bit of a bounce to continue here. How far is anyone's guess. One thing I am keeping an eye on is volatility. It seems to be dropping slowly in dollar yen, which is a bit of good news because it means we may get back to trusting some of the shorter term levels. We might see some of the closer levels, you know, being respected rather than every time we look at the screen we're 100 pips changed on something. We saw a bit of resistance into that 144, so that started to show that we were starting to respect some levels that we were happy to carve through previously. We've stepped up a bit, 144, 40s, 50s at the moment. So yeah, I think if, as I say, if vol comes down, we know what the Fed's doing. We're back to trading data points. Does it mean a 25? Does it mean a 50? All that palaver. So we're not out the woods with that. But I think the lower volatility will make this trading a bit easier might get me looking a bit more at this pair to trade it now. But yeah, I certainly can see a bit of further reversal in this, taking back some of the losses that we've seen over the last few weeks. But for the rest of the dollars, as mentioned, we're not really going anywhere at the moment. Aussie dollar still hanging around the highs. It's still okay. We're still in a case of a bit of an Nearly's. We're looking like breaking, but some are not and some are, and it's still a bit up in the air, which leads me to think we may be going to see a bit of consolidation developing.
Yeah, this one is going to trade around with risk as well, and with the commodities, this Aussie dollar. But we are hesitant in a zone where we should hesitate. Let's put it that way. Trying a couple of times to break up above that 68. 25.35, but it's a bit hesitant. I think it's a bit in line with what the dollar overall is doing now, trying to find a way to see what the big money is going to do, and they will probably tell us what to do. Perhaps they are still waiting for to see those PMIs as well. Yeah, it's an interesting level here, because if you get through that 68.5, let's say, around somewhere around there, we could actually be in for a bit of a run up to the 70 mark in the Aussie dollar, but it's still hanging in the balance. If we get a bit surprisingly because we were talking so much about, I mean, and that was the uncertainty about this cut, the Fed cut, whether it be 25 or 50. We were saying like, yeah, 50. They both have pretty much equal reasons to be done, because the numbers as such wouldn't have warranted a 50 bps cut, but the level and what they want to do with unemployment is. So if you continue to see a bit of a positive response to that, I think Aussie could go for that walk higher, unless the RVA starts to materially change tone, right? And that we will see very, very soon, actually.
Yep.
Next night, yeah.
Yeah, exactly.
Yeah, it's really an open question for me. I don't have any Aussie. I thought we would. There is a fair chance we are flying through, and then I think, yeah, we will print 70 relatively soon.
Yeah, thanks, mate. And this could be a bit significant. You know me, like to look at where things close, and we closed up there last week in the Aussie dollar. We're opening the week above that 68. So that could be a bit of a springboard. Ali, that's my 100-day moving average, the blue one in the middle there. You were looking for that. Let us know why you're looking at that one, mate. Tarek, nice one on your euro dollar short. Yep, trying to run it, trying to push it, taking some profit off 111.17s to 110.90. So nice pips, mate. I'm still long, actually. So we're on either side of each other, but both making money, so that's a good thing there. Yeah, you need a break under that. Let's go back just quickly. You need a break under that, under this area at the moment, 70s, 65, 70. If you get that, then as I said, we could be heading back down towards the low 110s, but that's the level at the moment. So don't know what you do with your stop, but whether you're bringing that down as well behind it, just protecting what you've made already. But your trade is your own, as we say. Kay, got any insight for us the early part of the week?
On the pictures, you mean?
Yeah. Do you want to take the charts over?
Yeah, just give me. I'm just going to show a couple, because I know Derej is here, and everybody wants to know what's going to happen to gold. But I think this week is going to be an interesting one, because we have ongoing geopolitics, partially responsible, I think, still for this holding. But data can change the picture, okay? We do have the US PMI. We do have towards the end of the week, if we would still be above here, those PCEs. that could change the picture a little bit. But we are still very bullish, right? So, and I would say that for as long as we hold above 25.90.95, this is looking for the top side again. Of course, there are people going to say like, yeah, okay, we can go short at 26.30 and we'll have made 15 bucks. Just look at this picture and look at the overall picture, how bullish this still is. So don't change a winning team right now for as long as we hold above 25.90, I'd say. DC and I would also argue on a close because we have seen to remember we have seen those little runs here that we had, those little stop runs and then bouncing. When the algos get a grip on the market, they can always do those extra little bucks. So watch it on a close, all right? But for as long as we're above here, excuse me, I'm going to defend my longs. Obviously, and of course, I'm still trading it on a around the core and regularly adding, then taking some back out, and then adding again if we see it lower. That's what I did as well on these levels before we went higher, and that's what I did again on the break of 2600. So already let a few go, and now I'm monitoring whether we hold above the basically 2600 for a starter, and then already on the intraday we went around this 26 15 16, and that's holding. I think if we get below 26, let's say 12 13, we could see a retest of 2600. But I do think we are on our way to mid 26s for a starter. If that weren't to be enough this week, let's say if US data slow down, we could actually see already a move up to 2700, and then that longer term area is still going to be around 2800 or so. But as I always say, one step at a time. So let's see what those US data bring. And then silver could be a bit more difficult right now. Okay, I highlighted this zone here above 31. I took some smalls off just above, just around and below that level. So I'm ready to reload, but therefore, I would love to see US data this week that don't fall out of bed, okay? Because as we know, the silver is an industrial metal, and that's always doing better when the numbers may show a little bit of a slowdown or averagey numbers, but they don't need to fall out of bed, okay? Especially PMIs and things like that could have an impact on what's happening in the metals and especially in silver. So still, I would say that level in the low 30s and just below 30 here, they are relatively important. So if you would get a test here, measure the retracement. Don't only go and judge a number that you see here, okay, or a line that you see here. Wonder why we come down here, okay? If it's on relatively okay numbers, we could find a bit of support here, and actually that could help silver if the numbers are not too bad, okay? Ryan already showed, but I think the dollar yen is relatively interesting, and we are trying to get below here now. See, we've got a bit of a double action here on in the 143.30. So that intraday could be a bit of a pivot zone. All right. So watch where we are once the US data come out. I was long last week. Luckily, took some off right into the resistance here because that happened over the fixing time. So a bit of a fixing move higher here. Took most of it off. I'm still like tiny long, but I won't hold it if it goes below here. We could be on our way back to mid 142s. If this is now a little bit of a channel developing in this dollar yen in the short run. Today's action is driven by euro yen expectations of probably about the US numbers. I thought that there was a good enough reason to go and go a bit higher, but I think we are going to need a bit better US numbers as we see here now. But keep that one in mind here for the somewhere the midpoint of intraday moves, just around where we are now in the dollar yen. Wanted to show another one. I think we can Euro Aussie. I told you, right? This had all the looks of going to visit 104, 162.5. We are getting ever closer. It is the prior low. It is a bit of a level from earlier as well. I think this is relatively important to know what's going to happen with 162.5 in the Euro Aussie. All right. If this is to continue lower, we may actually see a bit of profit taking. Keep an eye on what's happening in the commodities, as I said. Keep an eye on what's happening on risk also. Okay, but we may see a bit of a bounce here initially. But if risk continues to do well, if commodities continue to do well, and then we have the RBA upcoming, if this is toast, we could be on our way to 160. All right, so this is one also, especially after those weaker PMIs in the Eurozone, to keep a very close eye on, because a break here could grant us another 250 or so points, right? And then yeah, I mean the Aussie dollar, it's going to be around here, and then confirmation a bit higher up. I think we're around this 68, 65, 70. If that goes, I think we're on our way to 70, the figure. What's the time right now? Panagiotis Loulakis, you raised your hand. Do you want to ask us a specific question before we close, or you just raised your hand but you didn't say anything in the chat? I'm going to close it for today. I was going to look at dollar Swiss, but we are going to look at the Swiss a bit closer to the S&B this week. All right, and I think it's on Thursday, right? Is it? When is it? Swiss 26th. Yeah, that's Thursday. Yeah, we'll have a bit of time to look at it. It's in the meantime, it's really responded quite heavily, this Euro Swiss, to the European PMI data. We were about we were on an interesting level actually. If those PMIs would have held, we could have pushed a little bit higher. But it's really reacted quite severely to what happened on those Eurozone PMIs. I think the market was already front running a little bit of potential that the S&B could cut 50 BPs, but that's a bit of a wake up here. I think after the US data though, dollar Swiss could become very interesting. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Yep, we'll call it a day for today. Nice, easy Monday to get us into the swing of things. So, as always, thanks for coming to the Flow Show. Do have a good week ahead, and we'll see you all tomorrow. Have a good one.